Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 fund data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Jim, thanks for having me back, and thank you, everyone, for tuning in.
Ted, are you changing the balance of your Insider Index, what people should be looking at for investment?
We are. 4 times a year, we rebalance the Canadian Insider Index. That is a mid-cap-oriented index of Canadian stocks that have an inflation tilt, and the reason why it has an inflation tilt, Jim, is because insiders tend to buy stocks when they think, revenues are going up and economic activity is going up, and that has a nice correlation with inflation. And the Canadian Insider Index, which, as you mentioned, is tracked by the Horizons Canadian Insider Index ETF, and Inc. does get a license for that. But the index has had, up until last week, had a 7-week winning streak. And that was phenomenal, and that comes after a very tough start to the year, though. And so, just to back things up, what happened? Well, we had the COVID-19 pandemic for sure hit, but what was going on under the surface, even as we were rolling into 2020, was deflationary forces. And ironically, what appears to have happened, Jim, is when COVID hit, you had this massive response by central banks and governments. And that has turned the deflation ship around. Okay, now I know, look, we still have people on our platform that come in and talk about deflation, but you know what? I don't see it. I don't see it anywhere. And, I shouldn't say I don't see it anywhere. There are examples where, occasionally I go to the supermarket and the strawberries are on sale. Is that deflation? I don't know. But all I know is I can't get, Lysol or Clorox, wipes for any price, right? So, yes, and maybe I can hop on a plane to Montreal on a cheaper flight, but on a cheaper price. But I haven't checked, but guess what, Jim? I'm not going to Montreal on a plane anytime soon. So they can drop the price to $2, and I'm not going. So I think there is inflation everywhere, and, what we're seeing in our index is a response to that. And it's really important, I think, for investors to get that call right now. I know many of your listeners are very interested in the gold space, and we've talked about in our reports. Gold in general should do well in an inflationary environment. Some miners will do better than others, and I have this debate with my friends in the gold mining space all the time. They say, no, all gold miners are going to go up in inflation. I say, no, they are not, because some gold miners have high costs, and they're not going to do so well. But getting back to the rebalancing, what we've seen for this rebalancing, which just went into effect last Friday, we saw a couple of gold miners go out. Ironically, Barrick Gold, which got a lot of buzz around the move by Warren Buffett who about 2 weeks ago reported that his fund had taken a position in Barrick Gold. We actually dropped Barrick Gold from our index, and it's been in there though, however, since November 2018, and had doubled during that period. Long before Warren Buffett showed up showing any interest in Barrick Gold. Now we replaced it with a smaller company, which you can go onto our website and we talk about that. Our index website, we have the list of all the stocks that went in and out. But what's interesting though, in this sort of turnover that we had, we did lose a couple of gold miners, some precious metal miners, and in came building stocks. copper miners, a couple of copper miners, a copper miner, and some lumber stocks. So we've seen a tilt from insiders towards rebuilding the world after, or as we work through this COVID-19, as opposed to just sort of preparing for the worst. And while we still have plenty of gold miners in the index, as both, I think, a defensive move against inflation or deflation, because gold is one of those rare assets where I think it can do well in both. But again, gold miners are a different story. Some will do better under deflation. Some will do better under inflation. A couple really good ones could do well under both scenarios. But we have a tilt. We have a tilt towards rebuilding the world, and I don't know whether it will be in the same way we had it in the last 2 decades. Where we had globalization and we built these complex global supply chains, or whether we're going to be more domestic, whether we're going to be looking at building things closer to home, closer to our own, North America as opposed to global supply chains. We're going to have to see how that all works out. But certainly we've seen a tilt towards building as opposed to just bullion. So that's an interesting twist. Yep, the gold exposure is still in the index via some gold miners, but it's taken a little bit of a tilt towards getting the world built out with with new infrastructure, new homes, and the like. So that's the main signal we got from insiders in our recent quarterly rebalancing, which just happened last Friday.
Now, the Canada-China consortium that was working on a new vaccine for COVID has fallen apart, apparently because Chinese bureaucracy just couldn't move fast enough. Is that kind of a warning about future relationships with any kind of China-Canada business relationship? Because whether it's a medical thing or not, it's still business. You have to be very wary that politics now seems to play a bigger role than demand and supply.
Oh, absolutely. Well, China's always been a hard nut to crack in terms of markets. It really was asymmetric. Say what you will about Donald Trump. He called it. I mean, he was one of the first politicians on the global stage to call it like it was, and it was not a level playing field. We provided access to our markets, to China, to Chinese investors, but, it wasn't the same the other way around. It was not. It just wasn't. And, I keep hearing these Bay Street big business types talk about, we can't offend China. It's such a big market. Yeah, it's a big market, but good luck accessing it. If you have any success, it's very risky whether you're going to be able to enjoy the fruits of that success. Sure. Some will get it right. Some will do well in China. Some have done well in China. But it's very risky. It's politically very risky. And, it's up to every investor to decide if it's worth the risk. And I just don't, and bravo for those Canadian firms and American firms who go into China and take a risk. But please do not expect the government to bail you out or to change its policy for your commercial interests, right? Like, there are bigger interests. We have 2 Canadians that are being held hostage by the Chinese government. Now the Chinese government may have some legitimate concerns about, what's gone on with Huawei and the arrest of the former Huawei CFO. But you don't deal with those concerns by basically kidnapping 2 Canadians, and so that's the player we're dealing with. That's how they deal with things. And so if you're going to go in and invest in China, great, but really don't come back to the taxpayer or the Canadian government to bail you out one way or the other. You go in, you take your risk, and bravo if you score. I mean, that's great, but there are risks to that, and I just don't believe that the government should be, socializing those risks so that the profits can be privatized. That's the one thing I think conservatives in particular need to always be on the outlook for. We can never fall into the trap, of letting private enterprise have their losses subsidized by the taxpayer, and then keep the majority of their gains, right? I mean, it's got to be fair. It's got to be, you take the risk, you take the loss, and you keep your gains. And of course, there's going to be some tax to pay for services, but it shouldn't be a windfall tax for the Treasury, and nor should the Treasury come and bail you out if you stumble. So, I think that's an area that in terms of looking at China, that Canadian big business, I hope really looks at hard and applies the appropriate discount rates to their investments over there, Jim. Let's just leave it at that.
We'll have more with Ted Dixon right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Ted Dixon. The Conservative Party has a new leader in Erin O'Toole, even though he's a former defense minister under the Conservative government. A lot of people don't know a lot about him. Do you know anything about him, and is he good for Canadian business?
Well, to be honest with you, I wasn't that impressed with his leadership campaign. His campaign. But then again, I wasn't voting in that contest, so he didn't have to appeal to me. Who he had to appeal to, he did, and he won. So, and I thought, okay, well, that's great. You did what you had to do to win the Conservative leadership. Can he win the country? So I did. I listened to his speech, his acceptance speech on Monday morning, and actually, I was surprised. It was probably one of the best speeches I've heard a Conservative leader give in many decades. Okay, and so it really surprised me. Maybe the bar was set low, but this guy seems to know the score, and I think Justin Trudeau's had a free ride here for a few months with Andrew Scheer sort of being a lame duck opposition leader. I think that's over, and that's good for democracy. Whether you're a liberal or conservative or whatever your preference. I mean, it's not good to have an ineffective opposition. But what I found particularly encouraging from his speech was his recognition of Quebec and the fact that he has a strong base of support from Alberta, that he worked, I believe, I don't know this for a fact, but I assume, with Jason Kenney, the Premier of Alberta, in terms of his campaign, how shall I say, a posture for the leadership. I think Jason Kenney has a lot of influence with Erin O'Toole, but Erin O'Toole reached out, I thought, very effectively to a group of Quebec voters. Not all of them, which is smart. You're never going to get them all. Well, you never know. I mean, you never know which way the ball is going to bounce. But starting with a defined group of Quebec voters that you can build a base from. So I can see the makings of a coalition that Erin O'Toole is already putting together that actually could give the Energy East pipeline a shot. And I don't want to overestimate that at this point, but, it's certainly going to be a lot closer to happen with him as Prime Minister than Justin Trudeau, which is a 0% probability with Justin Trudeau as Prime Minister. It will never happen. Now, even if Erin O'Toole wins and has the best intentions to build an the east-west pipeline, the Energy East pipeline. It still may not happen because there's just so many hurdles that even, the federal government has to go, hoops they have to go through and the like. So even with the best intentions, it may still never get built. But, I think he's out of the gate. He did a good, he's got a good start. Let's put it that way. And so that's a little net positive for the Canadian oil patch. It's not going to make it or break it for them. It's not going to help, today, put food on the table for all those, industry workers who are, are concerned about, their future, and there are a lot of them. But, it's a positive step. So it was good news, and I was very pleasantly surprised with what I heard. It's easy to get cynical about politics, but it was nice to see it was a nice surprise that Erin O'Toole delivered, because I think he has shown some ability to stick handle through a very complicated politic, between Canada, English Canada and Quebec. There's some hope there that he might be able to pull it off. So, it's encouraging. People in the oil patch at least they had some good news Monday morning, and I don't think that's widely recognized, but I think it's a very good development. But, it's just a seed. We'll have to see if we're able to grow something strong, see if the tree can grow to the sky and deliver the Energy East, over the next decade. That would be great.
We'll have more with Ted Dixon right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, there's a huge disconnect between the U.S. stock markets and the U.S. economy. What does that mean for investors in the long run?
Well, in the long run, it's probably going to end badly, but I don't know if that's an investable idea, because we don't really know how long this divergence can continue. Like if anyone can tell me when it's going to end with any degree of certainty, hit me up on Twitter, and I'll we'll have a chat, and maybe we'll throw in a free subscription to Canadian Insider. But seriously, I don't know how long this is going to go on for, but we are entering a seasonally volatile period for the stock market in sort of mid-September, given the high stakes in the election. Maybe we'll get a reality check, in the next few weeks. But boy, Jim, as we've talked about before, we do have helicopter money that's going right now. The pace has not picked up, so there is a case to be made. Well, the Fed has kind of not hasn't put the accelerator, down to the floor any further, so that could slow things down. It hasn't so far, but we'll have to see the next few weeks. But it's a tricky time for investors. It's hard if you're a long-term investor, though. I think what you really have to do is keep your eye on inflation expectations. We write about this all the time. It's our D versus G economy framework. D for deflation, G for government-led inflation. If we continue to get the Fed pumping and pumping and pumping, and government stimulus, swashing around, that's going to be good for inflation expectations. That's going to be very bad for investors who are, favor dividend stocks and utility stocks, and look for high yield stocks. And the only reason why I think we've got bond yields where they are is because there's this game going on in the U.S. where you front run the Fed. And there's a big debate on this in Twitter, and you've got a camp that says, "Oh no, this is everyone wants to buy treasuries because they think the world's coming to an end. I don't buy that. I think everyone's buying treasuries because the Fed has set up a system where the I don't want to call them insiders, but Wall Street operators can make money by selling to the Fed back, the treasury bonds, and you don't even have to end up being the one who sells those bonds to the Fed. But the Fed has set up so many little changes and maneuvers that it's encouraged enough players to buy treasury bonds, like including the banks, the U.S. banks. They don't have. Why should they make loans? First of all, there's no loan demand. The only person who wants to take out a loan in the U.S. right, I shouldn't say only. I'm being facetious, but there's one big borrower in the U.S. right now, and that is Uncle Sam. And they changed the rules. The Fed changed the rules, so the banks now, if they lend Uncle Sam money, they don't have to, use that. They don't have to count that against their reserve calculations. So, everything's been kind of changed. The rules of the game have been changed to favor the Treasury market in the U.S. So, yes, yields are low there, but I think they're very vulnerable to a spike up at any time. I've been talking about this for a while. It hasn't happened really yet. I mean, we're getting a test to the upside now. Will Treasury yields get back to where they were in June? I don't know. You've got talk about Joe Biden raising taxes. Well, that'll embolden the Treasury bulls saying, you see, all the stimulus is going to be over. He's going to raise taxes, and that's going to put a thud on the economy, and Treasuries are going to rally. That's the case for continued lower yields. You have Joe Biden, raises taxes. The Fed keeps buying Treasuries, and la-di-da. We go on in this forever, this low rate world. But right now, that's not what we see. Right now, we see inflation expectations continuing to march higher. That we have the kettle is on the pot. It's boiling. It's steaming. I think the lid is going to blow off at some point, unless you do get a Joe Biden who comes in and turns it down, or the Fed turns it down. The Fed is not going to turn it down. The Fed cannot turn it down. As soon as the Fed stops increasing reserves into the banking system, you are going to have a problem. Never mind if it decides to withdraw those reserves by instead of buying treasuries, selling them. I don't think they'll do that again in my lifetime. I could be wrong, but they're even going to have a problem just stopping their treasury purchases. So, and that's because of the massive government debt. And even if the government were to balance its budget tomorrow, which it can't do because it's got so many entitlement programs, it still has to refinance all this debt. So the Fed is in Hotel California. It's got to keep doing what it's doing. It can't change. Could Joe Biden come along and say, oh, you know what, now we're going to pay as we go. We're going to raise taxes on all those wealthy companies. Yeah, it's a risk, but you know what? He may talk about that, but when he gets in power, what's he going to do? He's going to, tax Facebook? Yet, Facebook's based in California. Where's his vice president from? California. We'll see. But, you have to be careful of the narrative, and yes, that's a risk here. As we get closer to the election, that you get some sort of worry about Biden raising taxes. That could throw the market into a loop. You could have lower rates because everyone thinks that he's going to stall the economy. So it's a risk, but it's just a risk. It's not a prediction, because on the other hand, you'll have other people saying, oh, well, Democrats, the stock market always goes up, when Democrats are in power, and look, they always juice the economy and they overspend. So, I think the risks are evenly balanced, that we kind of have a bit of a drawdown here going into the election, but how long it's sustained, and do we go right back to the sort of inflationary environment that we've had for the past few weeks? I think that's the path of least resistance right now. But we're watching it, and we have our eyes wide open for the comeback of the D economy. The Fed has created a lot of zombie companies. They're warriors for the D economy. All these companies who basically are only alive because of the Fed and handing out money and socializing losses. So you could get some deflationary forces here striking back, and we're watching for that. We watch for that every week in our market report, and it's something that I watch in our Inc. chat all the time, and talk to our Inc. chat users about it all the time. So getting the inflation right, Jim, inflation call right. It is the call for the rest of 2020. That is for sure in our view.
Ted, thank you so much for being on the show.
Jim, thanks for having me back. Look forward to our next round.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.